All right, everybody. Hey, welcome to tonight's focus on opportunities in the Tampa market. We're honored to have you guys join us on Note Nation Top 40 Tour as we roll into Tampa Bay tonight. One of the big things that we have been doing over the last couple of weeks is obviously focusing on the top 40 markets across the country and identifying opportunities in the near future and the distant future with everything going on with the COVID-19 pandemic. We'll be talking about the residential, the commercial markets, where their opportunities are at, what does the future hold, how long do you need to be looking to wait if you're a real estate investor or just an investor in the market as well out there. So once again, thank you for joining us. Welcome to the Note Nation Tour. Honored to have you guys join us today. So we're going to talk, we've got local and national investors join us to tune in for the information we'll be sharing tonight, not only local to Tampa, but people investing in Tampa from all across the country. We'll be discussing the statistics and the numbers, what's going on in the market, what do you have to look for, what do you have to worry about. Is it good, the bad, and the ugly? We'll talk about the second half outlook of 2020 for everybody. And we'll also discuss future opportunities in the Tampa market and the surrounding areas and communities. We'll talk about where to look and how to get started doing that. But once again, I'm honored to have you guys here. Our mission over the last few years has always been, we close notes, our mission is we help investors to accomplish their dreams, increase their wealth through debt investing, and we hope to help you. If you're watching this tonight, whether you're brand new or you've been a seasoned investor, we love working with people out there. So who am I? Well, hi, guys and gals. My name is Scott Carson. I am known across the country as the Note Guy. I've been a very active real estate investor since 2002. A lot of experience over 15 years in the mortgage, debt markets, and finance markets. I've purchased over $500 million in debt for my own portfolio and purchased another $1 billion for our investors and students out there. I'm the CEO of WeCloseNotes.com and the host of a very popular podcast, the Note Closers Show. I've been working and teaching investors how to tap into opportunities in the market since 2004. And I encourage you guys, hey, if you aren't listening to the podcast, check it out. You can download it and listen to it wherever you listen to podcasts out there, the Note Closers Show podcast. But I invest all across the country. I love Florida. I've bought a lot in Tampa. Austin, Texas is home, but Florida is, I like to say, my second home away from home. So why am I doing this? Well, I'm going to spend time with you guys for about an hour tonight. We'll be in and out right at probably 55 minutes. I'm doing this because I love to help investors like you guys out there, whether you're seasoned or new. There's a lot of people in need of help right now, including investors, not just the self-employed or the unemployed or the people facing difficulties paying their mortgage payments. I love helping investors to create win-win scenarios. I love help people solve problems. I love to help people who are struggling. I've been there. I was once a deadbeat borrower back 2000, 2003. So I empathize what's going on in the market today. All right. I do believe that what's going on right now is an amazing opportunity that we may not only see once every 20, 30 years. The last opportunity this type was 12 years ago. All right. And we've been due for a market correction in the last 3, 4, or 5 years, however long you want to take a look at it. But like I said before, I was once a distressed borrower. I was a good guy, went through some financial hiccups, just like many Americans out there. And I love helping those that are struggling to stay in their house and really create win-win-win scenarios out there. We'll talk about that later tonight. But there's nothing greater, guys and gals out there, than helping someone overcome an obstacle or achieve a goal or dream that they thought was once impossible. Look, we've got 40 million Americans struggling right now in some sort of fashion, 4 million plus people struggling to pay their mortgage payments. And that was once the biggest dream for most people, is to buy their house. It's a huge dream for most. That's usually their biggest investment out there. And now that has turned into really kind of a nightmare. And one of the things that we can do is try to help them stay in their house. And I have set a goal myself to helping 1,000 investors over the next 12 months, because I think you're going to see a lot of opportunity. You just got to know where to strike and what to take action and what to do to avoid what everybody else is saying to do or not to do. All right. So where are the opportunities? Where are they lying at right now? Everywhere, everybody. Okay. I don't care what facet of real estate you're in. There are opportunities everywhere. And I encourage you to ask questions or comment. I'll try to get to every question that I can, whether you're watching this live or watching this on the replay. Opportunities everywhere. And I don't care what asset class you're in, whether you're in self-storage, you're in apartments, you're in single-family homes, you're in mobile home parks, you're in office space, hotels. There are opportunities in just about every asset class out there. Now, the biggest thing out there, I don't care what color of skin you are, how old you are, what your background is. I don't care if you've been a failed business owner in the past or you've gone through things. What we're going to talk about tonight are opportunities for everybody. The banks don't care what color your skin out is. They don't care where the money's coming from. And what we're going to be talking about, there are so many opportunities out there for you guys to tap into what's going on in the market right now. Many of us that were around and made money through 2008, 9, 10, and beyond, look back at that as a gold mine of an opportunity we didn't think we'd ever see again. Well, you know, I'm here to tell you right now, that is happening right now. It is already starting to kick off. You're going to see things over the next 4 to 5 months to the end of the year and into all of next year. And it's up to you. You can either sit here in the fetal position, whining and crying, oh, woe is me, or decide to take action and make something of the opportunities out there. Because like I said, I don't care what your race is. I don't care male or female. It's a truly opportunity for everybody who's interested in what we're going to be talking about. So what do the national numbers say? Let's dive into that, shall we? 11.1% unemployment rate in June. I thought we'd have the July numbers out yet. They have not been released. We'll probably be released here in the next week or so, but still 1 out of 9 people are unemployed. And based on the things that you're reading, it's going to get worse as the PPP programs run out of money. If the government can't get their act together to put something together, it is not a good thing. 40 million people collecting unemployment. Ouch. Okay. 52% of small businesses are expected to fail over the next 6 months. A lot of them are already going out of business. And you look at major companies that have filed bankruptcy or have gone out of business, not just retail companies, but major companies out there that have filed for bankruptcy. And then if they're having difficulties, you can imagine all the small business owners, the mom and pops out there that really run the lifeblood of the country are struggling as well too. 10% of homeowners were already struggling to stay current before COVID rolled around in March. That's the truth. 1 out of 10 borrowers in the country was already at least 30 days behind their mortgage. Now, if they've been out of work for 4 months, do you think that number's gotten any better? No, I guarantee it's gotten worse, okay? We currently are running at a 7.76% national mortgage delinquency rate. What does that mean? Well, it means at least basically 1 out of every 12 people is at least 3 months or worse behind. And I would say when the numbers come out for July here, we're going to see that number probably creep up north of 10%. Yes, a lot of people have been kicking the can down the road. We'll get to that later on as far as defaults and foreclosures being delayed. It's happened in Florida. We know that's happened. We'll talk about it later on. Currently, there are 4.1 million Americans currently in default, and that number obviously is going to go up as the delinquency rate goes up there. But 4.1 million Americans are already 90 days behind in default rates. If you look back at where we're at right now, 4.1, 4.2 in the first 6 months, okay? We're not quite 6 months there, but we'll just say it, okay? Well, back in 2008, it took us 18 months to go from 0 to 1.6 million defaults. We're 2.5 times faster, basically, and 2.5 times bigger than we were then. So that's what I'm trying to get at. At the peak in 2010, we peaked out at 15 million homeowners in default. Are we going to see that again? Yeah, I think we're going to see that again. It's mortgage loan delinquencies record spikes. It's just not subprime. It's all types of loans, the good, the bad, and the ugly. It's people that got in that were performing before. It's people with A-paper loans, the people with the non-prime loans. This is the country bracing again, potentially up to 15 million mortgage defaults. And that's just on the residential side, okay? Not just, now this is a headline taken just recently with a picture from 2007, all right? And it's funny is that, are we going to see history repeat itself? Yes, we are going to see history repeat itself. Maybe not, hopefully not as bad, but we're going to see a lot of problems take place out there, everybody. It just can't help but go on. You can't, let's talk about Tampa's numbers. Let's dive into Tampa because that's where a lot of this problem lies, was in the unemployment rate. We know that. Tampa, as of June, April peaked at 13.2. May's numbers got a little bit better. June's got about 25% better from 12.2 to 9.2. I would probably say in July, hopefully we'll see it stay at least the same or get a little bit better. Probably, hopefully it doesn't get worse. It's hard to say with the double dip kind of a double spike that's going on in Florida with the increased cases as companies are shutting down and cities are locking down again. But that's still 1 out of 11 people are unemployed in Tampa Bay area. Now, if you look at the area there as a whole, United States, this is for June's number, okay, 13% roughly, okay? And you can see how it beats Tampa is right on pace with the rest of the United States. Hernando County is 14.7. Hillsborough is at 12.6. Pasco County is 13.6. But now it's all roughly about that 13% back then. And yes, this was from the Bureau of Labor Statistics. They didn't have another chart yet for the rest of the areas yet for the month. So I'm pulling it off of that. So yeah, 1 out of 10, 1 out of 9, 1 out of 8. It's getting pretty bad, as we know that, obviously because of Tampa and St. Pete having, especially right now, being touristy season, summer, kids going back to school. We get that. Colleges are coming back. Are we going to see it come back in full force? Well, I don't think we are. And I think it's going to be a really slow year for Florida for a variety of reasons. Not only tourism being down, but also a lot of things being down as well. Let's look at the foreclosure markets. This is from Realty Track. Basically, Tampa has one in every basically 8,800 homes in foreclosure, which is not bad. But you see the counties and the zip codes that struggle. Based on the light blue and the dark blue, there's not any middle blue, okay? Really faint or dark. The difference between the haves and the have-nots. So county 33634 has basically one in basically just under every 4,000, okay? And it gets worse from there. That's the hardest hit. 33634 zip code is where it's the hardest hit there as far as foreclosures out there. Now, looking at the numbers year over year in the prior months, obviously pre-foreclosures are down. This is for June's numbers. July's weren't out yet. And you can see pre-foreclosures had a big spike compared to year over year. And they were also down. And if you look at the chart, you can see how it is as far as pre-foreclosures, auctions, and bank loans. Bank loans are down. Obviously, it was a big spike in April as things were trying to get done there, trying to finish things up, and then it just fell off a cliff and dropped down in May there. June numbers were lower than May's, as obviously there's been a moratorium on foreclosure files. And then you look at the activity, same thing, numbers don't lie there. That falls in line. One of the things you have to look at, though, is that across the country in May, June, the number should be out here shortly, but literally if we look at there's serious delinquencies are on the rise as well, okay? 20% of people in May could not pay their mortgage, another 20%. That's gotten worse in June. July, other parts of the country and in Tampa has gotten difficult as well. More than 50% increase in defaults over the last couple of months. And you look at some of the things out here, you can see 7.76 default rate up there. Month-to-month changed, increasing by 20%. We probably will see another 20 to 30% increase for July's numbers. You look at the number that I look at is that the number of properties that are 30 more days past due but are not in foreclosure is 4.1 million. Okay, that's not the 4.2 million that is 90 days in default. That's why I'm saying we're going to see probably closer to 8 to 9 million total in defaults once everything's going to get. That's not counting a lot of people also too out there who just aren't reporting, and the smaller institutions that aren't reporting this to Black Knight out there. And you got to love Florida. You guys are the top 5, the number 5 state as far as non-current default percentages. As a state, not just Tampa, as a state is just 10.5% of all mortgages are non-current, okay? Non-current. Ouch, okay? You're higher than the national average. National average at 7.76. Florida's at 10.5%. Tampa's a little bit higher. And you can see kind of what's going on there. A lot of people are scared about what's going to happen with their market. Are they going to get foreclosed on? Are they going to be evicted? And this chart talks about how there's a current statewide moratorium in the dark green states. And that's the same. Yes, Governor DeSantis extended the moratorium, not just from August 1st. He went ahead and extended it through September 1st, 2 days ago. Friday, he extended it for another month through the end of August, okay? So that's a beautiful thing for people. It gives you a little bit more breezy, a little more breathing room to do something with. Hopefully you're doing something with that time. If you have been laid off, you have been getting unemployment, or you know somebody who has, you're doing the right things by saving some of that if you can, but also starting to take this last 120 days, 4 months to do something, to find something, to figure out, to pivot, to figure out what's going on. Because it's not in Florida, everybody is struggling with this stuff, okay? Beautiful thing, obviously, 0 defaults, whereas other states are starting to see it starting to get back a little bit to the foreclosure normality. There are states up to 20% of foreclosures where they were beforehand. Some are up to 50. That's South Dakota. No surprise there. They're probably going to see a spike with Sturgis coming up here before too long, the big bike rally. But the thing to keep in mind on this is it's just not Florida that's being struggled with. You have foreclosures, you have a lot of deaths taking place, you have a lot of elderly out that neck of the woods. You also got a lot of commercial businesses struggling. But we all know that dominoes have been starting to fall here for the last couple months, okay? As household incomes decline, mortgage payments will be difficult or impossible for people to pay. You know, Florida being the fifth highest when it comes for unpaid mortgages, Florida is going to be another ground zero like it was 12 years ago. Florida is going to be on sale again. Maybe it won't be as extreme as it was beforehand, but there's definitely going to be a lot of stuff there in the Florida market, including Tampa, because Tampa and Miami, all right, Miami was the #1 city in Florida, #1 market out there. Tampa was actually the 11th largest metroplex. Miami was #1, okay, when it comes to more forbearance agreements, okay? And so you got to realize, they got to keep that in mind. Now, if you look at the amount of default rates across the different loan classes, what's kind of driving this 7.76% default rate, a lot of it's been the FHA buyers, people that got an FHA loan for the first time. 10%, what's an FHA loan? Well, basically, it's a government-backed loan where somebody's bringing 3.5% down, okay? Not really worried about their credit scores, but if they can show the income and they can show the job and some other things, hey, they can often get qualified, all right? But unfortunately, those people are very, that's your first-time home buyers. Those are the people that are working in the service industries and the tourism. They're not making huge amounts of income, all right? And so they're getting dinged now because now they're out of work, or their hours have been reduced dramatically. And what are they going to pay? Keep the lights on or keep the mortgage in place? They're going to keep the lights on. Compare that to the 30-year eventual loans. That's at 3.16. You've got VA loans, about 4%. All the other loans are roughly about a 4.5, 4.6 default rate. But the FHA is your first-time home buyers. What's that at? Roughly the $250,000 value or less. Looking at, Tampa median home price is like $280,000. I mean, obviously it's higher in some places and lower in others, but median's right about $280,000. That's where you're going to see that $300,000 value or less really start to see defaults. Probably more so in the $200,000 or less. All right. We all know that forbearance numbers continue to climb and retreat. Roughly, there's still about 4.6 million homeowners on forbearance. That's not counting another 3 to 4 million who haven't filed forbearance, who just haven't called the banks. They've not called their bank to negotiate anything. They're just playing coy or hiding their head in the sand. And we see this happen all the time. Okay. And now what's happened is the Fannie Mae, Freddie, they've offered 6-month forbearance agreements. And as we get closer here to those things ending this month, that first 6-month period, you're going to start seeing them kick the can down the road for another 6 months. So really roughly about a year-long forbearance agreement is what Fannie and Freddie have offered. I've seen it. I've been on the conference calls where they're talking about this. And they're also expecting to give more forbearance agreements after a year's over. So if you're waiting around for REOs, I'm sorry, you're probably not going to see that, okay? Now, is this good news or bad news for all of us? Well, Florida has a higher than the national average. We know that, about 30% higher than the national average. It's like what before happened. You also mix in longer foreclosure timeframes for Florida compared to other parts of the country. An FHA non-judicial foreclosure, I'm sorry, should it be judicial foreclosure, not non-judicial? It would take 810 days, okay? That's 2 years to foreclose on a Fannie, Freddie, or FHA foreclosure timeframe. Think about that. Get a year forbearance agreement, then I can drag foreclosures out at least another year. Ouch, okay? You got all this backlog of forbearance agreements. You got all these other backlog of people going to late that are going to call. Yeah, it's going to get ugly. It's going to be a while before foreclosures hit the market, at least 12 to 18 months out there for your real estate investors out there that are hoping to pick up a foreclosure at the auction or pick up something cheap. No offense, it's going to be a while before you see some stuff, at least through the end of the year, if not the middle of the year for the most part. That's not saying you won't see some foreclosures pop up from smaller companies. You'll see some of that, but it won't be the wave of the tsunami like it was beforehand. What about commercial debt? Well, there's a lot of defaults out there. We know that. You're seeing more and more for rent signs, for sale. When we talk about small businesses closing, we all know that there are, commercial has been on a big boom for a while. It's basically been 2-3 years overdue for a correction when we know that's a big correction. and you're looking at what's going on here. This is the chart for July 10th, looking at the different commercial classes and the default rates and where it's everything at. And you can see, obviously, lodging, hotels, big defaults in that. They lead the way with your retail being second spot. They expect these numbers to climb. Lodging is basically 27% of all hotels are in default. You look back at retail, is roughly around, they say 15, 16% here. That's probably closer to 20, 21, 22%. Now as more and more businesses are going out of business or having to shut their doors. Restaurant space is not included in here. That kind of falls in the retail space for the most part. Office obviously is, and student housing is taking a spike. Others, that's where a lot of your restaurants and some of your mixed use stuff falls into it. But all together, hey, it's getting bloody out there, everybody. It's really getting bloody for the most part, right? And you look at what's going on out here, there's a lot of opportunity taking place for us. What happened here? Oh, something did not, hang on here. Let me fix this real fast. Hotel transactions are down basically 75%. That's not a surprise. That's what happens when you forget to do that. Basically, you're seeing a lot of hotels being sold at ridiculous sale prices because they're selling the debt. Tampa is one of the bigger markets when it comes to, it's one of the top 5 markets as far as hotels in distress out there across the country. All right. And you're seeing that they're being, a lot of these things sold at a big discount because of what's going on. All right. They're selling it. They're expecting, hey, you see the huge default rates? Is that 25, one of every four hotels is in trouble? That's not a good asset class to be in. The banks are looking to move that stuff. And the reason behind a lot of this stuff is basically how it's been financed over the last couple of years. Originally, 12, 13 years ago, it was a lot of the commercial mortgage-backed securities were giving loans on a lot of this stuff, 64% back then. Well, that number is switched now. Over the last couple of years, of the loans that we're seeing that are in trouble, 53% of that was financed by the bigger banks. Okay. Yeah, they went out on the limb, started doing some riskier loans. Oh, hey, it's going to keep going up. We're going to finance this. Well, when they're financing stuff at 70%, 65%, and the market starts to go south, okay? Bank doesn't want to be at anything more than 70%. Well, if value drops 10, 20%, that means the borrower has to bring 10 to 20% more down as a down payment to write down that loan. They can't bring that money to the table. What happens? Hey, the bank starts the foreclosure process. Now, don't get me wrong, a lot of the banks will pretend and extend. They'll kick the can down the road 6 months, give them an opportunity or a year. But at some point, hey, the piper's got to get paid, and we're going to see that banks are going to be hit even harder than beforehand. And what's your opportunity? Well, you as an investor could either step in, start, provide some capital, start buying out some of the bad loans from the banks, work with the current borrowers, or try to reposition the property in some sort of fashion. Switch it up. If it's vacant, hey, readjust it, get it reclassified, put something else in it to make it work. Carl Kahn, if you've heard of this guy's in the business of the commercial stuff, he's been saying this since March. It's going to be bigger blow up in 2008. We're already seeing that. Nobody's even watching it. You had all these banks go out and finance shopping malls, office buildings, hotels, retail office. It's worse than it was then, and it's all credible institutions doing it again. We have a repeat of the Big Short, everybody, especially right now because the commercial stuff is not getting bailed out by the banks, by the government. All right. And it's going to be an even higher aspect of things. Like I said, 1 out of 4 loans on the hotel side, 1 out of 4 to 5 loans on the retail side. All in all, they expect the banks, the bigger banks out there, to lose roughly about $48 billion of commercial real estate loans. 48B with a billion, okay? Now, the thing about that, last week, or actually now 2 weeks ago, sorry, Bank of America came out and said, hey, they're setting aside billions of dollars for their soured loans. They are expecting to take a big chunk of that hit in the number of $5.1 billion in bad loans. Not just on the commercial side, but also a chunk on the residential side. Now, the residential side, they've pulled up. The commercial side, hey, there are a lot of individual loans in there that, make up $5.1 billion. Okay, we're not talking, let's just say 4 or 5 assets. No, we're talking, that's a lot of stuff across the country. It's just not Bank of America. It's Chase, Wells Fargo, Citibank. You've also got some insurance companies that have also bought a lot of this stuff, have financed a lot of this stuff because they thought it was great deals. If everybody's doing it, why not? yeah, it's going to keep going up and up and up and never going to turn down. Well, they got caught with their hand in the cookie jar, everybody. So where are the opportunities at? Well, foreclosures or REOs. You want to wait around? Probably not. You're not going to find a lot of those deals if you're an investor out there. Those are going to be difficult to find like they have been for the last few years. Do you want to be in the fix and flip market? No, because a lot of these hard money lenders aren't going to lend on stuff with the market dropping. A lot of the hard money lenders are pulling back their funds because they want to be able to have a lot of that stuff available for them as well to buy assets. Do you want to be in the rental market if people are no longer being allowed, if people in specific parts of the country have been delayed from foreclosure or stopped from foreclosure, been a moratorium on evictions for another 60 to 90 days, and it's been 90 days already? I don't think so. The real opportunity is in the debt game for you, everybody, okay? It's in the debt game, and that's where you're buying this stuff at a huge discount, buying the debt, becoming the bank, and then working it out with the borrowers in some sort of fashion. Hey, doing a loan mod, doing a forbearance agreement, but the fact that you buy this debt at a huge discount gives you a lot of flexibility to be the bank to work with the people in place, the renters or the borrowers who are using the properties as an ATM. Now, I don't think you're going to see a lot of residential notes until the fourth quarter or beyond. We kind of believe that to be more so that way. Why the fourth quarter? Well, I think you're going to see that because the banks are now have had 6+ months to look at their portfolio to see who's in forbearance agreements, who's in default with them. And while they're still in this trial period, they could probably sell a lot of stuff off and get bailed off by the bank instead of carrying this bad debt into the new year. So you're going to see some stuff and opportunities. I've already seen some smaller balance stuff come across my board in the last couple of weeks. Kind of amazed. I'll be looking and talking more about that and some of the other stuff that we do here in the near couple days. But you're going to see more commercial notes. I've had Wall Street guys talk to me so much in the last 2 weeks that they've seen more deals in the last 60 days than they saw all of last year alone. I mean, amazing deals, and they think it's going to get worse. They think it's going to continue to get dropped down quite a bit. But there's stuff out there. There are banks looking to move this stuff off their books, specifically in that smaller value market, not anything over $5 million, but in the commercial side, sub $5 million, especially $2.5 million balance or values or less. That's where the big opportunity lies. Okay, we'll talk about that in a little bit. But you've got to get creative in the assets you buy. You don't want to buy a hotel like this guy did, putting together a brand new hotel in Arlington, Illinois. No, because it's vacant. It's going to sit vacant. I traveled this weekend and the hotel was roughly only about 20% occupied. They were actually shut down for over 90 days. They literally shut down and laid off everybody except the management staff and one valet. Okay? You got to get creative. This guy, the owner of this one, saw this. He converted his property to apartments. Brilliant. Turned them into 2-bedroom apartments, sold them like that, and basically got them up, got them full, and he's getting more bang for his buck. People still have to move. Still people are moving. Okay? Our buddy Garrison Gilbert is looking to do this in Gettysburg, Pennsylvania. He's taking a 55-unit hotel and turning it into 42-bedroom apartments. There are smaller hotels all across the country, everybody. That's where a huge opportunity is, okay? They've already set up for residential. Doesn't take too much to go in, get some free zone, recalibrate to be turned into a residential apartment versus a hotel. Or you could also, like this guy is doing in downtown Denver. He's got a 107-unit office space. He's converted to storage space, self-storage. Brilliant. 10 by 10 units. You're not going to rent the office. Well, let's turn it into self-storage, which there's a big need for that, especially in a downtown area for other offices and companies to store stuff and have to drive all the way over to the CubeSmart or whatever it might be. Okay, and then the price they're trying to sell this 107-unit plus 7 covered parking spot, ridiculous. I got a bid on it right now because I see the opportunity. I can pick this debt up at a huge, huge reduction. Okay. As we said about before, the biggest opportunity for local real estate investors is in the commercial assets under $2.5 million in value and being able to be flexible with the tenants or borrowers, figuring something out to do. It's the overlooked asset. It's all the big boys in Wall Street, all the big guys want $5 million and greater. They don't want to deal with anything because it's not worth them. But for investors like you and me, that's a lot. Especially you look at Tampa, $2.5 million property. Hey, there's quite a few of them sitting out there that have probably got some vacant signs on them. And you got to know what to do with them. And we'll talk about that. All right. So some of the banks that are in trouble out there right now, everybody, we like to, here's one of the things that I want to come back to here real fast before I go into. They're expecting rents to be roughly reduced by 15% by the year at the end. Okay. They're already down about 10% across the board. but to be down to 15% of what market rents are at. You have a lot of, they expect it to even roll into next year. Office, restaurants. Here's the thing. If you've got increased vacancy factors and rent rates are dropping, if you're going to look at buying property, you can't look at what the lease is on for right now. You got to look at 85% of that. Then you also got to be competitive in working to attract people if you're going to buy a vacant property. You can't be coming in at retail price. You've got to be buying something at a big substantial discount, so you've got some flexibility. That's where buying the debt really comes in. And who's got some of the stuff in trouble there in Florida? There's a lot of banks in trouble, okay, across the country. But like I said, we like to pull a quarterly report called Bauer Financial. This is something we look at on a regular basis. It gives us, we pull it for every bank over 5 branches. Why 5 branches are made? Because then now they've got a little bit bigger footprint. They got to be a little more aggressive in their lending on both residential and commercial. One-off banks, they're way too conservative. They're not going to usually do any subprime because they just can't afford the losses. But out of Florida, and of our list of roughly about 1,500 banks across the country, 38 of those banks are based in Florida. Now, we all know that there's a lot more banks than just 38 banks in Florida, thousands. But this is just a small snapshot, okay? Small shot. 38 banks that are based in God's waiting room, okay? The Sunshine State. Out of those 38 banks, they've got $4.2 billion in 90-plus day defaults and loans on their books. $4.2 billion off that 38. Now compare Bank of America, $5.1 billion, okay? One of the top 3, 4 biggest banks out there. 38 banks have just about that footprint as well, already in default, okay? Average across the board is about 8% default rate in their whole portfolios. TIAA, FSB, 94% of their portfolio is 90 days late right now, okay? 94% is already 90 days late. Florida Capital Bank is only a 2-star rating out of 5. 18% of their portfolio is in default, okay? Totally in default. It's sad, sad day, everybody. Not good, okay? Those are the first 2 places I'd be reaching out to, which is what I will be doing this week, okay? So where are the opportunities? Why would you want to buy the distressed debt? Well, you start purchasing the debt now versus waiting 12 to 18 months for everybody else. You get to the front of the line, everybody. You purchase this debt at significant discounts, okay? They still owe, but you pick up this debt at a huge discount depending on location, foreclosure time frames, the values, the condition of the property. The bigger the issues, the bigger the discount, okay? You control the asset if you want it, all right? You're going to be buying this stuff at 30 to 70% off of what's owed and the current market values, okay? That gives you a lot of flexibility for strategies in loan reinstatements, modifications, short sales, foreclosures, turn around, sell it to somebody else, cash for keys for the borrower, keep the property and operate it. Whatever you want to do, you can do that. Take it over, turn it into a reperforming note. Especially with commercial debt, you can take it over and start collecting rents immediately, okay? Take it over and do what you want with it. That's the beautiful thing. There's going to be another huge transfer of wealth here over the next 24 to 36 months, like it was 12 years ago. Question I'm asking you is how big a piece of that pie do you guys want, okay? Give me 1 second here real fast, everybody. 1 second here. There's a lot of other advantages when it comes to buying the debt and becoming a note investor as well out there, everybody. I see so many people out there struggling as real estate investors with the traditional means of real estate investing and sending out postcards and yellow letters and door knocking to get 1 to 4 responses, 1 to 4% response rate. We don't do that when we're dealing on the bank side. We're picking up the phone. If you've got email, if you can get on LinkedIn, if you start dialing for dollars, pick up the phone and dialing and follow on a list that we show you how to pull. You don't need to spend thousands of dollars in wasted postcards and money. You don't have the money. I get it. We all got to start somewhere. All right. And that's the beautiful thing. If I make contact with a bank like TIAA, they're going to have a list that I can cherry pick from on a regular basis. It won't be just one property. It'll probably be 100, 200, 300 deals I can take a look at on a regular basis. That's the way it is. I have some lenders that have sent me stuff for 7, 8, 9 years now. They get on a regular basis. Okay. No direct mail, no marketing. I just make contact. Hey, I'm a note buyer. Let's see what your guys have to look. And we don't have to buy the whole thing. I can cherry pick. I got a list in just the other day from a Wall Street fund. 400 assets that I can cherry pick from. 400 assets, not stuff that I've seen before either. Newer stuff that I can cherry pick at big discounts, roughly 50% of as-is value or less right now on a one-off basis, okay? If I want to buy the whole bulk thing, I can get a bigger discount as well, all right? So that's the beautiful thing. There's a lot of opportunities if you know where to look. And I know most are like, well, I didn't know. Can I go down to my local bank and talk to my banker? No, you can't go down to Chase or Citibank or Bank of America. They're going to talk to you. But there are a lot of other banks out there that would be glad to help you buy some of the stuff and move it off their books. Okay, whether it's residential or commercial assets, you can do this without having to spend a lot of money or have a lot of experience. You know, you don't have to have your own money. There's plenty of investors out there willing to lend money to those out there that have great deals. If you can find a deal and start building the network, start talking with people, and do the things that I show you how to do. Look, there's tons of investors with money sitting on the sidelines ready to rock and roll on. And you got to think about that. One of the biggest mistakes and biggest regrets that myself and a lot of investors have been around for longer than 5 years, especially closer to 10 years now, is that we didn't buy more of what happened back in 2008, 9, 10, and 11. Okay, 15 million homeowners underwater in 2010. We bought a lot. I would love to go back and buy a whole lot more. And I think we're going to see that again if you know where to look and know how to take action and to reach out, start making connections, start talking with bankers, start looking at stuff. You ain't got to buy it all. If it's something that isn't you don't want, great. Throw it back and look at something else. And are there investors out there? Hell yeah, there are investors out there. There's over $9 trillion in IRA funds sitting on the sidelines uninvested right now. And Tampa, here you go, Tampa. Tampa, you guys have 29,000 investors alone with an IRA in the area out there around Hillsborough County, around Tampa, 29,000, okay? Out of that 29,000, 20 of them, over basically 2/3, have at least 150 grand or more in their accounts. That's right. 20,000 people at least have 150 grand or more. How many people do you need to talk to raise $1 million to take down an asset like that? 6, 7, 8 people? Yeah. Maybe less, maybe more, who knows? But heck, there's people out there dying for the retirement accounts to make something above zero, okay? And if you don't want to raise capital, you know what? There's 27,000 other real estate investors in the area. Those are people that call themselves real estate investors on their taxes. We all know there's a lot more investors than just that. Well, there are 27,000 real estate investors in the Tampa area alone. So look, if you get a deal in, don't want to raise capital, fine. Flip the deal to somebody else. Put yourself in the middle and be a deal engineer, be a deal maker. If you can find the deals, that you'll be in the haves, and those that have the cash but have not the deals will gladly pay for them, okay? And here's a question I asked you. You want to be the banker or the borrower? Now, all of us are in the note game. We're just too busy paying out versus paying in. That's right. If you got a mortgage, a credit card, a car payment, student loan debt, you're in the note game. You're just making payments out. You want them coming in and not going out. I think we can all agree. All right. And the bank always wins, everybody. No matter what happens, the bank is going to win on collecting. Either they're going to get their money or they're going to get the property as a collateral. Which one do you want to be? I don't want to be the guy going out there hammering nails. I want to be the guy out there just writing things and kicking it to my attorneys, kicking it to my servicing company, kicking it to the vendors to help out with this stuff. So how do you tap into the tsunami deals that we were talking about that we all know is going to hit? Okay. I've been teaching real estate investors about notes and debt investing since 2010. That's why I'm called the note guy. I've helped thousands of investors purchase their first non-performing note. That's what NPN stands for. Not just their first, but help them, buy their 10th, their 20th, their 50th, their 100th deal out there. And whether it's residential, commercial notes, we've got a lot of experience in both sides of that paper. Okay. I don't care if you're looking for cash flow or looking for assets to grow to your portfolio. Hey, buying debt is one of the easiest ways to do this because you're going to get stuff a lot cheaper. You're going to find a whole lot more of it, and you're going to beat the competition that's sitting at the foreclosure auctions like rabid dogs, rabid wolves, when you've already picked stuff up 6 to 12 months ahead of them that they would never see. And you can buy in one-offs or you can buy in bulk. Doesn't matter. We've seen trades from 25 grand all the way up to $5 million from a one-off asset that I pay $7 for all the way up to 184 assets. All right. There's opportunities no matter what you're looking for out there. And you don't need to have a lot of capital. You don't need to use your own credit. Banks don't care about your credit. They don't care where the money comes from. That's the beautiful thing, ladies and gentlemen. You can get started very easily. No direct mail, not mailing 5,000 postcards. You can jump online, send some emails, LinkedIn profile, and make some phone calls. I can show you how to make some money out there. So whatever your focus is, as I talked about before, single family homes, apartments, hotels, retail office, self-storage, mobile home parks, there's deals in all asset classes for you out there. You can truly create win-win scenarios and really great stories of helping people out there, just like this family who lived in their house for 18 years. Value went up, they took refinance, pulled some capital out, some equity out, to pay off some medical bills, pay off some credit cards, boom, husband gets sick, boom, out of work, boom, they're in default, mortgage gets sold 4 or 5 times. They've been trying to do a loan mod for 4 years when we picked up their note. 30 minutes, going a little bit back and forth with them. We got a loan mod in place for them. They paid on time for 6 years. We cut years off their interest, and I still came out smelling like roses. That's a beautiful thing. And you see a lot of this stuff. We're not talking mansions. I mean, there's some high-rise, nice places you can buy the dead-ons and stuff. But this is your American home. This is your salt of the earth, the blue-blooded, no-collar Americana, everybody. And we need help with that. And like I said, if you're looking for the high-rise on the beach, great. We can look at that. You'll see high-end condos have been hit hard, all right? Or your smaller apartment complex, your big apartment complexes, you'll see that kind of stuff hit the books. We already seen it. You have to decide what piece of the pie, how big of the crumbs do you want to get, because the crumbs feed well and the crumbs pay really well too, everybody. And I don't care if you want to do it big or you want to do it small to start off with. We've all got to start somewhere. Our buddy Gene here out of Indiana started off as a real estate investor, little rehabs, a little bit here project, doing what he could in Elkhart, Indiana, right? Then about 4 years ago, we taught him the right things to do in the note business. And fast forward now, about 4 years later, he sends me a text message that he's totally changed his investment aspect. He's got over 13 million in private money invested with him. He closed on his 134th, 135th deal. He's gonna make 7 figures this year like he did last year. It's a pretty good retirement for a guy that likes working on old cars. He used to be a hot shot driver across Indiana and Illinois. Whole different facet. And Gene sent me a text and said, "Hey, Scott, thank you for everything you've taught me. Thank you so much for your support and continue to support. Let me take my business to a whole new level." Which you love stories like that. Just like we love Laura Blanc here. Laura Blanc, like many real estate investors, are going to workshops, are going to seminars, are going to real estate clubs, trying to wholesale, trying to do whatever they could to make some money because they're in a competitive market. She lives in the south part of Austin. We met her, took our training, bought a couple notes with her own funds. Fast forward about 18 months later, she closed on another 14, 15 with other people's funds. Fast forward another 2 years, she's getting ready to close on a portfolio of over 148 assets, I believe. She's already closed on over 100. Adding on another 100 assets in one trade for $4 million with other people's money. Life-changing because of what we taught her. You can also look at Keith Collins out of Ohio. He's got a lot of experience in real estate, doing a variety of things, from commercial to residential, working in city governments. I think he was a mayor of a small town there. When he learned the note business from us, it completely revolutionized what his focus was. And he said, "I don't think I'll ever retire, Scott, but thank you so much for what you've taught me and my wife, Lisa." They made 7 figures in 2019 because of what we taught them, showed them how to tap into the market, and they expect to do that again this year. I love stories like this. Now, they've all got some experience, but you could be brand new with no experience either, get rock and roll. Like our buddy Rafael here from San Diego, small business owner, the car detailing business in Chula Vista, California, 15 full-time employees, doesn't even own a home, never bought a house. And when we started working with them, we had to go through and teach them some stuff about real estate. But he learned about the note business, always wanted to be a real estate investor and pick notes. And within about a month of him going through our training, he closed on 5 deals, 2 within the first 2 weeks of learning exactly what we do. 2 in the first 2 weeks, and then closed on another 3. The first 2 got reperforming at over 20%. The other 3, I think he sold 2 out of the 3 for almost double his money. I think the 5th one he's still working out, but he's already raising, I think, 150, 200 grand in private capital in his local area. Unfortunately, with COVID, he had to lay his whole team off. He had to close his doors. Now he's like, "Scott, I don't think I'll ever open my business again because I don't think I need to. I think I love what I'm doing now with the note business more so than ever. I'm seeing more deals, and the return on investment is so much higher than me putting in 40 hours a week. So I don't care. A lot of experience or no experience, we can teach you. All right? And there's a lot of opportunity. We just need people all across the country be willing to jump in and start looking at deals and buying. And we've done this for thousands and thousands and thousands of note investors all across the country. Like I said, I don't care what your age is, what your race is, your male, female, whatever, doesn't matter. If you can buy debt, if you can work out with a homeowner, you can really create win-win scenarios out here. Don't care what school you went to, whether it's Harvard or the School of Hard Knocks. We've helped thousands of people across the country really become very active note investors and really doing a lot of good out there in the community. How they do it? Well, we've got our one-day class called Note Weekends, our online note training. That's usually the first step for most people. This is a great way to dip your foot in the water to see if the water is warm, see if you like it. Okay. Now, what's covered in our Note Weekend training? Well, like I said, it's a one-day online, like Zoom here, live training with yours truly. And as some people will say, it's the best thing they've been through when it comes to the note business. It's very Cliff Notes version is what they call it. Okay. And our upcoming one is in just a few weeks out from here. It's on a Saturday. We live stream the videos on Sunday, or you have to replay it on Sunday so you can watch. But it's live basically from 9 to roughly 3, 4, 5 o'clock is when we went to this a couple weeks ago for our last one we just did. I'm here to help answer questions for it, but we go through a lot of basics in this. Like I said, help you get started, help you learn the note business, and then you can go from there. It's normally $99. We've dropped it down to half price, $49. Includes the replays, includes a lot of other bonuses too that we'll get to you in just a second here. But our next one is August 22nd. That's a Saturday. And the one after that is September 19th. We usually do it about the third Saturday of the month. This is a one-day in-depth training that we cover the note business, how to make money in notes in this year. Now, what will we cover? The first part of the day, we talk about where and how to find notes and what to say and what not to say to the banks, how to get banks to send you lists, okay? Big chunk. I believe the last group, we had over 2,000 banking contacts within the first 3 hours of the class. Names, phone numbers, and emails for a big majority of them out there. That's not too shabby, huh? We'll talk about how to fund these deals with other people's money, how to tap into IRA investors in your local area to fund your deals, okay? We go through a big chunk of how to raise private capital. We'll talk about the different exit strategies to make money, because there's over 10 different exit strategies for you to make money on the residential side, and there's roughly about 11 to 12 on the commercial side that we'll go through for you guys. We'll also talk about the vendors that you need, the team members. You're not a one-man band doing this. You're not going to be the guy going out there knocking on the door. You're not going to be the guy going foreclosing. You're in the debt business. There's some vendors that you'll need, but we'll show you how to get your funders to fund your due diligence money. We'll talk about how to fund your workout strategy money as well, too, for you. We'll talk about some different loan trading platforms. You can start looking at deals today. That's right, today, not in 6 months, but let's start looking at residential commercial deals in the next few days, okay? And we also throw in a lot more stuff out there. But like I said, noteweekend.com is the place that you want to go to get signed up for that. That's noteweekend.com. And it's all just for $49. We give you a ton. If that's not enough, let's cover some of the bonuses for you, because we give away over $1,000 in bonuses for you. Like I said, we dropped the price in half from $99 to $49. It's also, I'm going to throw in my one day. It's basically about a 4-hour of me calling banks training. This is normally $49 per person. We throw that in. You get to be a fly on the wall and listen to me call banks. That's right. You hear the conversations of me actually calling the banks. You get the replays of the one we just did. You'll also get a ticket to the next one we do this month. As I'm calling the banks on my list, as I show you how I pulled my list, after I emailed out to the banks, you can see who exactly I'm calling, how my emails work. You can see hear my scripts. You can hear my wording. You can skip the scripts to see what's being said, what not to say as well to you. See me get hung up on too. We'll also give you the most recent Bauer financial list, the quarterly list that Bauer publishes. This costs me roughly $360 a quarter to buy. We'll throw that in there for you right there. Over $400 in value. If that's not, we'll schedule a 30-minute one-on-one phone call with me. I charge $1,000 for consulting, $1,000 per hour for consulting. So a 30-minute call with me is $500. You get a one-on-one phone call with me after the class to talk about where to go, what you want to do. I'll totally encourage you to take me up on that offer. Glad to help you out with that. Also, too, we throw in the replays included. Plus, if you want to bring your spouse in or business partner and have them watch as well, we can also have them. That's included as well. And then, of course, we also have a very great Facebook group of about 900 people who are students of ours. We've had more than 900 students, but it's a great group for people to communicate, to ask questions, and network, to really share ideas. It becomes another place for you to get information, questions asked. If you need somebody to go out and look at a property, you need advice for an attorney or some other things, that's a group, and that's included with that as well. So all of this together is over $1,000 in value. just for 49 bucks, guys. I'm not here to get rich on $49. What I'm here is to educate people that I can send deals to. I'm not going to send it to somebody calls me, hey, you got a note in my backyard? Have you bought a note before? Nope. No, I don't. All right. Do you understand what I'm talking about servicing? No. You mean I can't go out and knock on the doors? No, you can't do that. We see deals all the time, and I want to be able to feed people that take my class deals. That's how we make our money, is buying the deal flow. Okay. We just need to make sure it's a little bit insured. Free has no value, everybody. So at least make it worth my time a little bit for you guys to show up on a Saturday and join me in. And obviously, if you guys can't make it the full Saturday, don't worry about it. We had somebody that was driving across country from Arizona to Utah to pick up their daughter and was watching on their phone, listening in and taking notes and getting rock and roll. And also, if you want to sign up for another one of our training, that 49 is fully applicable to any of our future trainings as well. So why should you sign up? Look, guys, you learn how to help borrowers and investors out there. Okay, borrowers, the banks, and your investors out there too. I could say the banks, but nobody cares about the banks. Okay, you can help them and do a lot of good helping people, helping America again. All right, you make money helping people solve problems. That's one of the most valuable things, is when you can solve an issue. You can take a bad situation that everybody's been stressed out about. And I don't know if you've ever been late in your mortgage or been laid off. That's a very stressful time. If you can come in and help somebody keep them in their house, keep that dream alive, man, that's a good thing. And I'll tell you right now, if you've ever wanted to build wealth, this is the opportunity that you've been waiting for. Not selling tiddlywinks, not jumping on Amazon trying to sell Amazon crap or eBay. We all know that game is fixed. What's not fixed is the debt game. Guys and gals, if you want to really do some good and make a difference, not only in your lives, but your children's lives, or you're retiring your wife, or taking a better vacation, or being just financially stable, this is the opportunity that you're looking for. And we all know distressed borrowers. We all know distressed business owners. Hey, why not be able to help them or give them some options? Because like I said before, there's nothing greater than helping someone overcome an obstacle or achieve a goal or dream that they thought was impossible. Think about that, everybody. Make money doing good. What a beautiful day. Now, I only wish we could help keep everybody in their houses. About 50, 60% of the time we're able to. The other 40, 50% of the time, hey, we've got to take it the legal route. Okay? But if you can give somebody an opportunity and they won't take it, that's their own fault. Okay? And we don't go to foreclosure every time. All right? We always, hey, do you want to stay in the house? And let's have you make a payment plan. Let's do a trial payment plan. Let's do a loan mod. Something. You know, pay, you know, stay. But we can still create something where it's affordable and it helps you out of a hole that you're in. We don't run a charity, but we do help a lot of people with a lot of good. All right? So I would love to have you attend Note Weekend. Like I said, everybody, sign up now. If you go to noteweekend.com, we're here. You'll get the replays to last workshops. You can start watching and listening to that now in advance of our class here in a couple of weeks. Like I said, it's me. It's not a pitch fest. It's me literally delivering the goods to you all day on a Saturday. We'll start off with how to find deals. We talk about how to fund the deals. We'll talk about how to make money and flipping deals if you need to. Look, if you don't have capital and you just want to wholesale notes, you can wholesale notes. I don't think it's a smart play because they leave a lot of money on the table, because if you're going to market for wholesaling, you can market to raise money. All right? And I can show you how to do that and how to be effective. So noteweekend.com, everybody. Are there any questions out there for anybody that's on the call tonight that's watching this? Love to hear from you guys, whether it's you're commenting on Facebook. Hi, Stephen. Hey, Frank. Hey, Michael. Hey, a few others. I guess somebody else is out there. Questions do you guys? Oh, we got some questions here online. It's a Saturday class. The manual's online. We deliver via Zoom. That's one of the questions we got from somebody. How's it delivered? Yes, if you can't make it the full day, I can send you. You'll get the replays the next day. You can watch. If you can't make it for August's class, you can have it bumped to the September workshop. So yes, you can do that. Okay. Great. Love to have you, everybody. Noteweekend.com. Get signed up today. And let's get you start learning. Let's learn to have you start biting off some of those crumbs out there and really take your real estate business to a different level. It's totally different. The last 10 years have been amazing. Lots of amazing deals that we've seen. Never mailed them postcard. Never mailed a yellow letter. Never went door knocking like I did from 2002 to 2010. No, I don't do that anymore. Don't have to. It is the smarter way to be a real estate investor in today's market. So love to have you. Love to see my class, everybody. Get signed today, noteweekend.com, and start getting those bonuses, everything delivered to you now. We'll see y'all later. Thanks again. Bye.